Okay, I want to talk about trading stocks and their trends. And the reason that this came about is I was somebody else wrote this. I didn't write this. I can't take credit for it, but I do believe it. And what it says, or what they said, was to be consistently successful in trading, always and only trade in the direction of the dominant energy of the stock you want to trade. They said market, but I wrote stock. I.e., and then I wrote this: if the trend is up, go long. If the trend is down, go short. And then, so perfect examples of this is, don't try to catch a falling knife. Here, because if you tried to catch it here, you would have been you would have been cut. Now it did bounce and popped here, and or if a stock is on its RSI is in overbought territory. It's overbought, therefore I should go short. And I think this is a mistake because you're going against the trend. So now, having said that, let's just go back one step. Professional traders have strategies that they follow, and I do know some traders that do buy this, do this trade. And they're very successful at it, but I think it's far and few between. Professional traders generally, I would say, go with the trend. And the ones that didn't, for example, on KRTX, you always have people shorting stocks just because they're up. And they would have got crushed in this trade here on the KRTX. And lots of guys did, and girls. Did get crushed because they were shorting it just because it was up a lot. As a matter of fact, the one guy that was Sure Trader, I saw a tweet from him, and he said in here, when the stock was around 90 or close to 100, he said if I could find short stocks to short, I'd do it a big size. And after that, the stock went to 150. So he would have had his hide handed to him. Now he's a professional trader as well. But you don't want to short stocks just because they're up. Now, the caveat to that is if it's a pump and dump, or a lot of these stocks that are trading in say under $3 or under $2, guys that have big books are very successful at attacking stocks that are up, fighting the trend, because they can influence the market. But stocks that are bigger than any individual trader that you can't necessarily influence, then you shouldn't fight the feeling. You shouldn't fight the trade. And if the trend is up, go long, go with the trend. If the trend is down, go against. Or if the trend is down, go short. And I think, and so for the purposes of this webinar, this video, is that to be consistent, we want to stay in the trend. I'm always saying that the trend is your friend, and I'm going to demonstrate it here. So if you're an amateur trader or new trader, beginner, you don't have a consistent, successful track record, buying the dips, then don't fight the feeling. It's just, there's lots of stocks out there that you can trade. We're in a bull market, so we're focusing on going long stocks. Somebody asked me this morning, would you short this stock? Well, the markets are very strong. There's so many great stocks out there that you can go long. You don't want to be looking to try and scalp a stock for a few pennies or a few dollars. And I think this is a good example, CGC. Now, I just pulled this up randomly. I added the RSI to it at the bottom here. And this is a relative strength index. Now, there's lots of these out there, different ones, stochastics and things. But this is easy to demonstrate with the RSI. Let's talk about RSI for a second. This is a mathematical calculation. And typically, you're taught below 30, the stock is oversold, and to go long when it breaks back out. And over 70, it's overbought. Look to sell the stock and go short. This is Canopy Growth. It's in the trend is down. It's a huge downtrending channel. And we did short this at 24.5 and it went down. We covered it a little bit earlier, but it did gap down on earnings down to 14. So it's a $10 move. But let's talk about the RSI. So I disagree because this is a mathematical calculation, and therefore it can only go to zero. It can't go below zero. So these are arbitrary numbers, 30 and 70. Now statistically, maybe and perhaps people have done studies on it, and that's why they use it. But in a downtrending market, the worst this can do is go to zero, but the stock continues to go lower and lower. So there's a fallacy to the calculation, in that it has these buy signals, yet the stock continues to trade lower. And this is maybe where you find you buy a stock and within a day or two you're stopped out of it because it goes lower. And that's because the trend is lower, not because the RSI gave you a signal that you should buy and the signal is wrong. So let's look at a few of these signals. Historically, or by the textbook, when the RSI gets below 30, it's getting into an oversold situation, and when it comes back up through 30, that's where you buy the stock. So here is the about where it went here. So this candle here, and it had a high of $45, we'll call it. The next day it traded to 47. So if you bought the stock at 45 on the breakout, it did add a couple of bucks. Okay, that's pretty good. But if you're looking at it for a swing, then it rolled over the next day back to where you bought it, 45, and then sold off sharply, back down into oversold. Next time here, same thing. You buy it at, it had a high of 36.22, and it did trade to 36.74, and then so here's your relative strength buy, adds 50 cents, and then it rolls over and it comes off and continues to come off. Now this one here may be a little bit different because it's at the bottom of the channel, which also coincides with the breakout of the RSI at 25, and it did trade close to 29. So after a few days, it was up $3 or $4. So okay, yeah, one of them did work. So we've got one working. Popped a little bit, but then traded much lower. Traded absolutely lower right away. Did pop a little bit and then traded lower, came off sharply. So you get one or two that do work, but we're looking for consistency. We're not looking for inconsistency. And in general, then, we'll call it probably 60 or 70% of the time, when a stock is in the downtrending channel and you use an oversold indicator, you're going to lose money on it, because the trend is down, and this only indicates for that instant in time, because this can only go to zero, that the stock is, in relative terms is oversold, but not in absolute terms, because look at this thing just kept going down and down and down. So let's say that we had been a bit smarter, and when this broke to the downside of this stock, this support level of 39, and was in a downtrending channel, we shorted it, you could have stayed short because it stayed in this channel from $40 down to $14. It's a $26 move. Versus looking to buy this stock on a bounce here at, say, 15, and now it's traded up as high as back into resistance at 18. So you got a $3 move to the upside and a $26 move to the downside by staying in the channel. So, so my point being is that there's no reason to fight the feeling. If you're finding that you're getting stopped out of stocks as soon as you buy them, it may be that you are you're fighting the trend. This is a huge downtrending channel. There's no reason to buy this stock. Look for stocks that are very strong. Those are the ones you want to buy. Or in the vice versa, you don't want to try to buy this stock. It's a POS. Just continue. And so there's a bit of news out that Congress, the federal government, is going to introduce legislation to legalize marijuana, which from a big perspective is good for people that, so that they do smoke pots and they're not breaking the law. But still, each state needs to approve it in their own state. So there's a long ways to go before pot is ever legalized, if ever, in the United States. I'm getting off the topic on why I don't like the pot sector, but it did pop on that news and it's coming up to resistance. I would be looking to short this stock again at 1830, 1840 level, maybe even if it could get up into this level here, 21, which is the declining tops line, and short this stock. I wouldn't be looking to buy it because the RSI says that it's oversold and needs to be bought. There's just no consistency to it. So that's my theory on the relative strength index, or any of these, like statistics, stochastics, or whatever it's called, and relative strength and such. I think if you want to use something like that, the OBV is a much better indicator. Look at the OBV here, way down at the bottom, negative 4.3 million. Why? Because the stock just continues to sell off. There's no strength in this at all. And though the relative strength is moving up in here and here, it's relative. It's not absolute.